Okay, good morning, everybody. My name is Chris Scherzer. I'm with the Clear Group, and I'll be taking you through the open enrollment presentation this morning. We are going to record this presentation, so anybody that can't make it or you need to go back and listen to it to help make your decisions for this open enrollment, you'll have that available for you. So I'll get started here. Again, it's our open enrollment. This is our topics that we're going to cover today. So open enrollment overview, eligibility, we'll look at the medical, HSA, dental, vision, life, cover the disability, and then we'll talk about premiums, and then give you some contacts at the end in case you need them now or anytime in the future. So open enrollment overview. So we are staying with United Healthcare with the All Savers plan. We are also going to continue with 3 similar plans. We did get a fairly substantial renewal this year, which we negotiated down and made a few small changes to the plans. But really the increase was due to the utilization on the plan. So the way the plans were utilized did cause our rates or premiums to go up. So I'm going to talk a little bit about how we can all kind of work together to potentially use some lower cost alternatives for you. We'll highlight some telehealth options, also talk a little bit about using urgent care versus ER and some other ways that you can save money, and it'll also save the health plan money, because at the end of the day, the way you use the health plan determines what the rates are at the end of the year. And as I wanted to point out, we did have a significant decrease to our costs last year. Evolve pays a flat 70% on this, so as the rates went down, you saw a decrease as well. So I want to make that point that last year we were really good claims, good consumers, moved to the All Savers plan. We didn't have such a great year, but I think with a few tips we can turn that around. Again, we made some small plan design changes to help mitigate this increase. And then also just to level set our premiums, our costs for 2020 plan year are lower or slightly lower than they were in 2018. So we took a pretty big dip down. We're going back up, but we're still below where we were in 18. So still in good shape. Guardian, no rate changes, no plan changes. So good news there. We still do have some open enrollment opportunities for you on a few of the products, which we'll cover. And then we'll finish up with Aflac and Legal Shield. All right, any questions so far? All right, so I'll hit on eligibility. So as a full-time employee, that would mean you work 30 hours or more per week. Benefits are first of the day following 30 days of employment. You also can add your dependents, legally married spouses, children up to age 26. That's an ACA rule that is still in effect. Upon turning 26, they would go off the plan that next month, and then they would find another policy or elect a COBRA option. Natural children, legally adopted, stepchildren are all available to add to your health plan. Okay, qualifying life event. We take advantage of a Section 125 plan through the IRS, which allows a pre-tax deduction for any of the premiums that you pay for your products. And that does lock you into your plans unless you have a qualifying life event. And that would be a marriage, divorce, birth, death, any kind of major event. You want to get a hold of Rhonda and ask her what your options are. But again, whatever elections you make for this next open enrollment and renewal will be what you'll keep unless you have a life-changing event. And then you can contact HR for options. Okay, so now I'm going to hit on the United Healthcare All Savers plans. Again, we have 3. We have 2 PPO plans and a high deductible health plan. So we're going to stay in the same theme that we currently have today. This is what the plans look like moving forward. So we have a buy-up PPO plan, we have a base PPO, and then we also, again, on our far right, have our high deductible health plan. So I'm going to start with the 2 PPO plans, talk about the little differences between the 2. And again, this is an open enrollment. You have an opportunity to change plans. You can add dependents, take them off. Now's the time to do that. So the buy-up PPO plan, that one changed a little bit. So it went from a $2,000 to a $3,000 deductible, $6,000 family. It still is 100% co-insurance. That is a fantastic plan to have. Max out of pocket is $5,500. The reason for that is the copays do accumulate towards your out-of-pocket max. So if you went in for a hospitalization, you satisfied your $3,000 deductible and everything was 100%, you'd still have copays past that until you reach the $5,500 out-of-pocket max. For families, $6,000 deductible, two deductibles there, and $11,000 is your max out-of-pocket.
Hi, Chris.
Yeah.
Sorry, I don't know if you know, you're not sharing the full screen, you're sharing the presenter screen. So we're only seeing, we're seeing a smaller piece of the image, so if you could share the other screen.
Thank you, Irma. We're going to try to correct that now.
You know how to do that. Whoa. It's that thing. Sure how to do it, actually.
You might try clicking on display settings there on the top and change it. Swap presenter view and slideshow.
How's that? Is that better?
Perfect.
Yeah, much better.
Okay.
Thank you for the help. It's really appreciated.
Software company, they know.
I know. Just an insurance guy.
This looks much better for us.
Thank you. Thank you for that. Yeah, appreciate it. All right, so maybe that's a little easier to see. We've got, again, primary care is $30 copay. We've got our specialist at $60. Preventive care is still an ACA rule. Preventive care is at a $0 cost, no copays, deductibles, or co-insurance for preventive care. There is a website for a list of preventive care schedules based on your gender and age, and we'll be happy to send that out so you can take a look. But if you have a primary care relationship, your primary care should lead your preventive care. Make sure you get in for your men, get in for your PSAs and the rest, and women, all of your well woman checks along the way. I am going to talk about virtual visits. We do have a slide or part of a slide on that. It is a $0 cost to you, and I think that's a great value and something that you should utilize regardless of plan that you're on. So I'll touch on that. Again, inpatients, outpatients, anytime you're going to the hospital, you're going to have deductible first, but the plan on the buy-up side is a 0% co-insurance. That means 100% coverage after your deductible. Imaging, diagnostic, same way. It's deductible first, and then the co-insurance at 100% follows. Emergency room services, we did get a little bit of claims data this year, and we realized that we had a little higher ER utilization than what a typical employer of your size does. It is expensive on these plans to go into the ER. You have a $300 copay plus your deductible. So again, you're going to go towards that $300 or $3,000 deductible. So average cost in an ER nationally is about $1,500. So very expensive place to go, long waits and all the rest. Maybe a little better place to go is an urgent care facility. So regardless if you're in Arizona or other parts of the country, there are lots of urgent care facilities that have popped up, and that is a $100 copay, no deductible, no additional cost past that. So again, maybe a good thing to do here as you're working through your plan selections is to also think about an urgent care facility close to home or close to work in case you get sick or you need some help that's not life-threatening. Urgent cares are a great way to go. It's a $100 copay for you. Okay, prescription drugs on our buy-up PPO plan, $15, $35, $75, $250 for tiers. So generally tier 1's generics, but not always. There are a few generics that are higher cost in tier 2, but You know, always ask for a lower cost drug if possible. Generics would be preferable. There still are lots of generics out there, so be a good consumer. Ask for a lower cost alternative for you when the doctor is filling the script. It'll save you and the health plan a lot of money. Okay, that is our buy-up PPO plan. So again, just want to point out a couple of the changes on that deductible side that did go up a little bit, as well as the out-of-pocket. But otherwise, most of the rest of the benefits are very close to the same. All right, so I'll move over to the base PPO plan. This one is a $2,000 deductible. It's 3 times for family on this one. So it's a $6,000 family deductible, so 2 and 6. And it's an 80% coinsurance that United Healthcare pays. So you pay 20% after deductible on this plan. This plan also has a higher out-of-pocket max, $6,850 and $13,700. One of the nice features on this plan is you have a $0 cost for the first 3 visits, whether it's PCP or specialist, and then it goes deductible and coinsurance. So if you're thinking about these 2 plans, the buy-up plan doesn't have any kind of limits on your visits to the primary care specialist, so you can continue to make that $30 or $60 copay. If you don't use your health plan very much, pretty healthy, might be a great plan for you if you go in once or twice a year. It's a 0 cost to go into a PCP or a specialist, but once you exceed 3, it goes deductible and coinsurance. Okay. Preventive care, again, same as the other, is a $0 copay. And virtual visits are free as well. Inpatient has an additional $250 copay plus deductible and coinsurance on this plan. So I want to make sure you're aware that you do have that extra $250 copay, which will again go towards your out-of-pocket max. Imaging is also a $250 copay plus deductible and coinsurance, and then your diagnostics are going to be deductible and coinsurance. So a couple maybe helpful hints whether you're on the buy-up or the base plan on any kind of imaging, diagnostics. If you can go to a freestanding facility rather than into a hospital setting, it will be a lot cheaper for you. So I'll give you an example. I went in for an MRI a year ago and went to a freestanding facility, and it was $750. If I'd gone into the hospital, it would have been over $3,000. And so on your plans, like my plan, I'm with United Healthcare as well. I would have been I was subject to deductible on that MRI. And so instead of paying the full deductible or most of it, I ended up paying a lot less, got my credit, and got in and out of a freestanding facility much quicker and easier than I would have in a hospital setting. So think before you go, think about a lower cost option for you. So try to stay out of the hospital settings as best you can this next year. ER is also, $250 plus deductible plus coinsurance on this plan. So you do have that extra $250 copay plus deductible plus 20%. So again, on a $1,500 charge, if that's the average ER, you're going to end up paying pretty much the majority of it. So you really want to try to stay out of there best you can. Nice feature on our base plan is the $0 cost for urgent care for the first 2, and then after that, it's deductible and coinsurance. Okay.
Hey, Chris.
Yeah.
When you say $0 for the first 3 visits, if you have a family, is it 3 visits per person or 3 visits combined?
It's per person.
Okay, thank you.
Per covered person, yep. Okay. RX copay is a little bit different here as well. We have $15, $50, $100, $125. Again, that $100 and $125, those are going to be our higher cost medications. If you can get a lower cost medication and get down into a tier 1, tier 2, or even a tier 1, that will save you a bunch of money and of course save the health plan as well. So be active when you get a prescription, ask questions, try to make sure you manage your pharmacy costs best you can. We'll also give you a tool to use to help you manage your costs here in the next slide. Okay, So if you're in a PPO plan or you want to stay in a PPO plan, the differences that you want to consider between these two plans are you have a little higher out-of-pocket on your base plan. You're going to have higher premiums as well. If you're a very low utilizer, that base plan would probably work really well. You have a 0 copay for first 3 visits for primary and specialist, as well as 2 first free for your urgent cares. If you're a middle or a higher utilizer, maybe you want to look at the buy-up plan. That might be a better fit for you. Has lower out-of-pocket max, and it also doesn't go to deductible and co-insurance on primary care, specialist visits, or on your urgent cares. So now is the time to make your decision if you want to stay in a PPO plan. Really give those a good look and make your best decision that fits you. Okay, I'm going to move over to our high deductible health plan. This is still the fastest growing product in employer-based health plans. Is a high deductible health plan with an HSA. Avolve's deductible is $2,850, $5,700. It is an 80% plan. So once you exceed your deductible, everything's going to be an 80-20 split with United Healthcare if or when you get to your $6,550 out-of-pocket max for your single and $13,100 for family. So as you can kind of see down the list here, primary care, specialist, inpatient, outpatient imaging, everything is subject to your deductible first and then your co-insurance second. So this is important to obviously manage your costs the best you can to save your deductible and your HSA funds. Being a wise consumer on this plan really pays off. I know virtual visits are a cost here, but it's only $59, which is going to be cheaper than going to a primary care. It's going to be a lot quicker access as well. So really consider your virtual visits, even if you're on the high deductible health plan. It just can't be first dollar coverage that disqualifies your health savings account if it is. So that's why it's a $59 cost. Okay, ER, they do tag on a $250 copay on ER as well. And again, for those that tend to use the ER, if you can stay out of there, if it's not broken or bleeding, that would be ideal. It's very expensive and long waits, especially in Arizona. Urgent cares are deductible and co-insurance, although an urgent care is typically could be as low as $60 or $70 and maybe as high as $150 or $200 depending on what they do, but a much lower cost to you and to the health plan as well. All right, prescription drug coverage after your deductible. So again, in a high deductible health plan, you have to satisfy deductible first and then co-insurance second. After you satisfy your deductible, it goes to co-pays, not co-insurance. So you got a 10, 35, 60, 100 co-pay schedule after your deductible. So again, very important to find lower cost alternatives for whatever drug that you take, if available, and utilize the low-cost generics at Costco, Walmart's, and the rest. Okay? Any questions about that? There is a note down at the bottom of the slide. Medical and dental deductibles are based on calendar year. So if you do switch plans, so for example, if you're in the buy-up plan and you're going to switch to the base plan, your deductible is going to credit over to that plan. And so you'll have credit for the rest of the year. But again, deductibles and out-of-pockets are going to reset January 1.
I have a question, Chris.
Okay.
So speech therapy and occupational therapy, do they fall under specialist visit, or what category are they in?
Jamie, they're usually specialists, right?
Okay, yeah, depends on how they code it. It's either specialist.
Are you talking PPO plan, base or buy-up?
Yeah, buy-up PPO and base PPO.
Yeah, probably specialist.
I think he's asking if it's a $60 copay or if it's deductible and co-insurance. So it'll be a specialist. We can look that up. What's your name?
Jose Moreno.
Jose Moreno. Okay.
All right, thank you.
We'll follow up with you.
Thanks.
Okay. Any other questions before we move
Yes,
off the
Erwin.
medical plan?
This is Erwin. I have a couple of questions. In terms of preventive care, is acupuncture considered as preventive care, or it's not even included?
It's not covered. Acupuncture is not normally covered. It's not considered mainstream medicine, so the insurance company doesn't cover acupuncture except in rare cases.
Okay. And then
Go ahead, Erwin. I have a follow-up to Erwin's
for
question.
diagnostics, I found it to be cheaper to I tried this one time where there's a home kit blood test from Everly Well, but then I have to pay it separately. It was so much cheaper than having to go to one of the testing facilities. Do you guys cover that as well, or that's not covered?
I didn't.
The home kit? You say you did a home
Do
kit
the
for
blood
blood?
work at home instead of going to.
Right, you know how they have testings now where they send it at home and then you do your own testing as opposed to going to some testing facilities.
Are you referring to biometric screening?
No, a blood test,
Oh,
whether
regular
it's cholesterol testing
blood draw.
or even the new one that's colon testing and so on.
Yeah, the Cologuard is covered.
Cologuard is
Yeah.
covered, okay. But what about blood tests like for cholesterol and sugar? It's almost like 3 times or 10 times cheaper than going through.
I'm not familiar with that.
We'll have to
Okay.
ask.
Everly
Yeah.
Well, okay.
Okay. Hey, Erwin, one other point on the acupuncture. So that is an IRS allowable expense. So even if it's not covered under the health plan, if you're on the high deductible health plan and you put money into your HSA, you can use those pre-tax dollars for acupuncture.
Or FSA.
Mm-hmm.
Or
What about FSA? You could use it.
Yeah.
Yeah, FSA as well.
Right? Okay.
Yeah.
All right.
Okay, thank
Yeah.
you.
And is chiropractic care included in any of these?
Yes, it is included.
Chiropractic is covered under medical as long as it's not maintenance. If it's maintenance, then you're talking HSA or FSA dollars.
Yeah.
Okay.
Okay.
Good questions. All right, any other questions on the medical plan? Plans? All right.
I have one on mute. I have one real quick question.
Sure.
Compared to last year's program, which one is the All Savers? Was it the buy-up?
They're all savers.
Yeah, all three are under the All Savers umbrella, which is owned by United Healthcare. So they're all three under the same All Savers program.
Okay, thank you.
Yep, you got it. Okay, we're going to give you a few helpful hints and tips here. First one on the list is GoodRx. If you have not downloaded that yet, it's a great app. It's a great way to find cheaper alternatives, to have access to coupons. So it's a really great shopping tool as well. So if you get a prescription, you can pull up the app, put it in, and it will shop around your zip code. So if you wanted to fill the script, but again, you know, it's the lesser of the cost of the plan or the copay, or on your HSA plan, it means even more because you have to satisfy deductible first and then it goes to copay. So you want to find, not only ask for the cheapest prescription you can get from the physician that is still allowed, but you also want to fill it at the least expensive place. So CVS is probably one of the most expensive places to fill your prescription. But next time you get a prescription, download your GoodRx app, put it in, it will do the shopping for you. It'll show you the cost at the grocery stores, at CVS, Walgreens, Walmart, Costco. So it'll do the shopping for you. You'll be amazed at how different the cost is, you know, just even from locations that are a few blocks away from each other. So that is a great app. That's a good thing to do. Download that app as you use your health plan this year. If you ever need a prescription, it's very helpful. Another thing that, yeah, go ahead.
I'm sorry, I just testified that I've been using it. It's really incredible in price difference. So I agree with you on this one.
Incredible and surprising, probably too, huh? I've used it for a few years. I'm amazed at how different some of the costs are. But it's incredible to get a little transparency on the cost, and that GoodRx app will do that for you.
I agree with that as well, and I also use it. There are some concerns floating around out there about how GoodRx uses your personal information and sells it, just to make people aware if you want to do some research. But I mean, I use it as well, but wanted to throw that out there.
Okay, thank you for that. All right, so that's the first one. The second one is if you're on a maintenance medication, you would want to do a mail order 90-day supply for 2.5 times your copays or 2.5 times your cost. If you are, typically you're going to get a lesser cost even on the HSA, high deductible health plan. Delivered to your home, there's an auto renew feature to it. So really nice and easy. If you are on a maintenance medication, you want to look into this and you need some more information, reach out to Rhonda. We'll make sure that she has the form that you can complete, have your physician sign off on it, and you can start to receive it at your home. So that's a great way to save a little money and time as well. All right, so establishing a relationship with your primary care physician, that is essential, I think, to helping direct your health care. So make sure that you do establish a relationship with a primary care physician. It is a really good idea in case something happens and you need referrals. You need to, have somebody that has some history with you. That is a great way to help manage your health care, is to have a relationship with a primary care. Avoid services in hospital settings. I know I mentioned that before. It is a very expensive place to go. There are urgent care facilities. There's a virtual visits you can access, and I'll talk about that in a second. But ER and any kind of hospital setting procedures will be your most expensive places. So you want to stay out of the hospital setting best you can. If you haven't used virtual visits, you should certainly try it. It is obviously not in place of your primary care, but it is a great substitute if you're nights, weekends, and you can't get to your primary care. Virtual visits are a $0 copay for your 2 PPO plans, and it's roughly $59 for your HDHP plan. Within United Healthcare All Savers, you have 3 options. You have Amwell, Doctor on Demand, and Teladoc. So Teladoc is telephonic only, and Doctor on Demand and Amwell are video chat. So what that does is if you download the app, you are set up if you are late at night, weekends, whatever it might be, and you need access to care quickly. You can go on this virtual visit app and speak with a licensed physician, and they can write prescriptions for you and or triage whatever you have going on and tell you what your next steps are. So it might say, hey, you need to go see your primary care in the morning or go straight to ER, or I would recommend going to an urgent care or convenience care clinic. So they can kind of help triage whatever's going on with you. Again, if you have some life-threatening emergency, you need to go to the nearest facility. But these are for low-grade issues, and typically you probably know what they are already. It could be asthma, allergies. You need a Z-Pack. Something's going on. Virtual visits are a great line of defense there.
There's a flyer on that in Employee Navigator. I strongly suggest you register for it now, not wait until you need it, because there is a registration process where they ask some questions on your medical history and who your primary care doctor is. So if you get that set up ahead of time, then when you need it, you're ready to go.
Yep, good point. All right, we're going to talk about health savings accounts. The IRS limits change a little bit every year. So again, if you're on that high deductible health plan, you want to certainly take advantage of a health savings account. It's an ability for you to take out your HSA contributions on a pre-tax basis and allow them to grow tax-free, and then also use those dollars for eligible medical, dental, and vision expenses. We are utilizing Optum Bank, which is a United Healthcare company. Your limits for this year, $3,550 for individual and $7,100 for family. So if you add one or more people to your health plan, you can elect the family amount, which is $7,100. Catch-up contributions, if you're over 55, you're allowed to put an extra $1,000 in. Okay. If you elect one of the PPO plans, so again, health savings accounts are for the high deductible health plan, the flex accounts are for the PPO plan. Same concept, that just works a little differently. The FSA is for eligible medical, dental, and vision expenses as well. When you set this one up and you make your election, the money is available to you on day one. On the health savings accounts, the money is available when it's in your account. So think about the HSA as a true checking account, and the FSA is like a pre-funded checking account. So if you wanted to put $1,000 in your FSA at the start of our health plan, you have $1,000 available to you for eligible medical, dental, and vision expenses. The good news about HSAs is you put the money in, it's your money, it rolls forward, you never lose it. In FSA, you need to be a little more careful with the funds that you put in there because it is a use it or lose it situation. So at the end of the plan year, if you haven't used the funds in your account, you will forfeit those funds back to the plan.
$500 actually.
$500 rolls.
Yeah, rolls.
Okay.
$500.
Okay, everything but $500 will be forfeited back to the plan. $500 will roll. There is a little difference. We do have medical reimbursement and a dependent care reimbursement. The medical is available and pre-funded. The dependent care, you pay for the expense and then you submit for reimbursement. Okay. The limit for 2020 is $2,750. Okay, any questions on that? All right. Just a few comparisons between the HSA and FSA. Again, they're designed to allow you to use pre-tax dollars to pay for eligible expenses. Just some quick overviews. The HSA, again, you can change the amounts. It is employee funded. You can change it anytime. Just go in and ask to up or lower the amount based on what you have going on. You can roll over, again, $500, and it's pre-tax dollars, which reduces your taxable income. FSA, again, the money is available day one, and it attaches to one of the two PPO plans that you elect. You can't change the amount as you go along. If you terminate from Evolve, you lose whatever money was in there. That stays with the FSA plan. Again, you do have the advantage of a pre-tax deduction and a reduction of your taxable income. Okay. Eligible expenses, I generally say if it's covered by the health plan, dental, and vision plans, it will generally be covered by or fall under eligible expenses according to the IRS. This is IRS governed. It's not governed by Basic or United Healthcare or anybody else. But generally it's for prescription drug costs, deductibles, coinsurance, copays. As you can see, acupuncture's on here, chiropractic care, dental visits, LASIK surgery, which is generally not covered. You can also use your FSA, HSA funds for that. Ineligible expenses, things you'd probably, think about: cosmetic surgery, teeth whitening, gym memberships, weight loss programs. Over-the-counter medications used to be covered. You need a prescription now to have those as eligible HSA or FSA expenses. Okay, that's it for our medical plans along with our HSA and FSA. We're going to hit on the additional benefits, dental, vision, life, and disability. Again, these didn't change. Rates didn't change as well, but I am going to review them briefly for you.
Chris?
Yeah.
Quick question. Can an employee apply for both SHA and FSA, knowing that there's an FSA limit?
No, if you're on the high deductible health plan, you can only elect the HSA, and if you're on the PPO plan, you can only elect the FSA.
I see. Okay. Thank you.
Yep. All right. So dental overview. So again, you pay one premium for your dental plan. You're either going to elect the value or the NAP plan. The biggest difference in these plans is your out-of-network. So in the value plan, if you plan to stay in-network, you have a guardian dentist. That plan will work really well for you. If you elect a value plan and you go out-of-network, you will be balance billed almost certainly. The fee schedule out-of-network is lower than usual and customary, and typically we see a lot of balance billing out of that. So again, it's an open enrollment for your dental. If you want to switch between plans, you can do that. But the value plan utilizes, better on the in-network. On the NAP plan, you do have in and out of network as well. As you can see in the middle there, it says 90th UCR. That's usual, customary, and reasonable. That will cover most of dentist charges on an out-of-network basis, but the very high-cost dentists, you may have some balance billing there. So point is, on these two plans, they look very similar, and they both have out-of-network, but consider that the value plan will work way better if you stay in network. The NAP plan, the NAP plan, allows you to go out-of-network with a much higher amount of coverage for out-of-network dentists. Okay, they're both PPO plans. They both have a $50 basic and major deductible, $2,000 annual max that Guardian pays. And then you can see the schedule, co-insurance down below. 100, 160, 50 in-network on our value, 100, 160, 50 out-of-network, but again, out-of-network's on a fee schedule. $1,500 ortho max. And then you do have some rollover, so if you have some max left over, you can roll over $400 per year, up to $1,500 on the roll. The NAP is a 180, 50, 50, both in and out, $1,500 max, and you get the additional rollover for the NAP plan as well. All right. Okay, our vision plan is same theme. It's a PPO plan, in and out of network. You have $10 copay for your visit. Lenses are $25. Frames and contacts, you have $150 allowance as long as you stay in network. And the frequency is every 12 months for exams, lenses, and frames. This is one of the best vision plans out there that money can buy. It is a high max for frames and contacts. It has the highest frequency every 12 months, and it has a very low copay for your visit, for your exams. So it's a really nice plan. If you go out of network, it's a reimbursement. You're going to have to incur the expense and then submit it for reimbursement. So staying in network, your money's going to go a lot further on your vision plan. Okay. Voluntary life. You have employee, spouse, and children available to you. Max benefit is $500 for employee, $100,000 for spouse, and $20,000 for children. We are not in a guarantee issue situation unless you're a new hire. If you'd like to purchase additional insurance, or if you haven't purchased any at all just yet, you would need to fill out a form called an evidence of insurability. You would fill that form out. You can get it over to Jamie here at the Clear Group, and then we will get it processed with Guardian, and then they'll make the determination if you qualify for the additional amounts.
Those forms are all posted in Employee Navigator also.
Okay, perfect.
So, sorry, one quick question back on the dental coverage. Has that changed at all from last year? It looked pretty much.
It's exactly the same.
Okay.
Yeah.
That's what I thought.
Yeah. No changes. Yeah.
Okay.
Yeah. No changes there. No changes on the vision of the life. Voluntary, short, and long term are staying the same as well. We've got short-term and long-term disability. Short-term is 60% of your base salary. Maximum benefit is $1,000 per week. Waiting period before benefits kick in, you've got 2 weeks to use PTO, vacation, whatever that might be. And then on the 15th day, disability kicks in. Benefits are paid every week on short term, and it'll go out 11 weeks in duration. If you had elected the LTD as well, same schedule, 60%, $6,000 monthly. So after that 2 weeks plus the 11 week benefit duration, you get to your 91st days when the LTD kicks in. Benefits are paid every month. So you get a monthly check on disability, and that goes all the way out to Social Security normal retirement age. All right, if you are a new hire, you are eligible to elect this without answering any medical questions. If you have not elected this in the past and you are interested in electing it, you can look at the costs on Employee Navigator. There's also an evidence of insurability form that will need to be completed to qualify for the short and long-term disability. All right, we'll finish up with our last two benefits here. We have Legal Shield, ID Shield. This is a couple of great benefits as well here. They're broken out and you can buy them separately or combined, but you have your Legal Shield with personal legal advice, loan doc assistance, moving traffic violations. If you live in Arizona, you know about those with the cameras. You have uncontested divorce, separation, adoption. So you have a lot of assistance there on the legal side. And then the ID Shield as well. They have privacy monitoring, security monitoring, consultation, and then restoration as well. So you got coverage there for either family or individual. And again, you can either do them separately or combined. Paul D'Agostino is our rep. You can email him or call him at any time, and he is more than happy to help you out on those coverages. All right, we're going to hit on premiums, and then we'll turn it over to Aflac to finish this up here. Again, medical premiums have changed a little bit year over year on the medical. They did not change on the dental or vision. Those are the same costs that you're currently paying. But again, if you are looking between the base and the buy-up plan, again, think about how much healthcare you consume, which plans you know would be a better fit for you, both from a coverage standpoint and then also from a cost standpoint. And all these premiums are in Employee Navigator as well.
And that is 70% that Evolve pays.
That is 70% that Evolve pays. Yes,
very generous.
Very generous. Very generous. Yep. All right. We will turn over to Aflac.
Hello, everybody. This is Ruth with Aflac. I'm pretty sure I've met quite a few of you, and we are still here after about 17 years now. So, so I just have to do that because you're not in front of me, and I can no longer throw ducks at you for those of you that remember those days. Anyways, so you spent a lot of time digesting this information, and most of you know that Aflac is a supplement to everything that you just heard. One of the things that is important to know is that we are through payroll deduction just like the rest of your benefits, but you can keep any and all Aflac programs at the same rate. They're portable should you have a job change or work here till you retire. So you buy it at the group rate, you buy it at that age, and it is your plan as long as you pay the premium, no matter where you work or live. I think that's pretty important, actually. You've heard a lot about deductibles and out-of-pocket. That's what most people use these plans for, including myself. I bought the plan before I worked for the company, and I've been with them just a little over 31 years now. I'm a consumer too. I use all these products. I have those similar copays and deductibles, and that's what most people use this for. Now, one of the main differences with Aflac and the HSA and the FSA and those kinds of funds is Aflac money you can use for anything you want. You can use to pay your cell phone bill. You can use to buy groceries. You can use it for rent or mortgage. When you get paid from Aflac on any of our plans, it's your money that you can do what you need to do with it. So you can have this obviously in addition to your FSA or HSA. So it just gives you even more of a financial net there, instead of having to go into savings if you have any, or IRAs or 401ks or whatever you have to do. We also do cover families if because we have so many plans, especially with, you got little guys. The accident plan, come on, they just, all you're doing is running around after them. And the accident plan is, you know, you have co-pays and deductibles if you have a family member that's gotten hurt or sick too. So Aflac will pay the policy holder for any family member that's also had an accident, an illness, anything like that. We do have our standard plans, the accident. The hospital choice plan now has the ability to pay for your in-hospital copay. So if you've got a deductible and it's, you know, $2,000–3,000, Aflac can come in and pay that for you, for, again, any family member. So our plans have evolved, we'll call them. Get it? Evolved. No, it's evolved. Sorry, just insurance is kind of boring. So trying to make it fun. Come on here, guys. So we still have similar plans, you know, the short-term disability. One of the main differences there from the group is that you can continue it when you leave. And another thing about our programs is we cannot raise your rates for any reason. It's called guaranteed renewable. All of our rates, all of our plans are guaranteed renewable for your life. So once you're in at that age and you're in at that plan, on that plan, we cannot raise your rates for any reason. So that's actually kind of exciting too. I would say probably half of the people who I can see are making claims are from other companies. They bought it through a group and then they kept it, and they're using it now just as an individual, but they kept the same group rate. So I recommend over the phone, we can talk. My number, by the way, for those of you that hopefully have pens or pencils or something, is 602-430-3759. It's on the screen. It's really tiny for me, but it might be really big for you. There is our hospital doctor visit copay deductible plan. I would think that most of you would want to find out about that. The short-term disability insurance, which has a 0-day elimination period for accidents. That means if you or a family, if you're hurt, we will start covering your income right away. If you're sick, there's a 1 week wait. 1 week if you're sick. The accident plan, again, covers copays, deductibles, all those things, but you can use it for anything you want. You can use the money for anything you want. The cancer plan, you know, that's always kind of hard to talk about because, you know, if any of you know anyone that's had cancer, you know, even though 70% of the people diagnosed now survive with all our, you know, advances in medicine and so forth, some of us have lost someone to cancer. So what these plans do, and especially the cancer plan, is take your mind off of money and finances and worrying about that while you're worrying about where to go and what the best treatment is for you in that particular cancer. And our plan is even designed to pay for traveling. We'll pay for flights to get to Sloan Kettering in New York, for example. If that's where the best treatment, the best doctors are, we'll actually pay your plane ticket for you and the companion, and also hotel and such. So that plan really goes above and beyond. They all do, or I wouldn't be here. So anyways, the short-term disability, by the way, is also a guaranteed issue. So there is no questions at all on the plan. I'd like to also bring up the fact, and I'm kind of doing this on the fly here, but if anyone's interested in ortho, Aflac has a dental plan that includes ortho. So if any of you guys got little guys, because I know when my daughter was about 8 or 9, they started talking about braces, and I'm like, what? That's too early. But actually, no, they actually put braces on kids now at 8, 9, 10, 11. So if anyone's interested in finding out more about ortho specifically, we do have a dental plan that does that. And it doesn't change anything that you've already got. We're in addition to anything that you've seen already. We don't take the place of anything. These are all considered supplements. They pay in addition to, and the claiming is usually direct deposit. I recommend direct deposit, or you've got the U.S. mail to depend on. And that pays, you know, the commercial says 1 day. I'm going to say between 1 and 3 days, because the payments come out of Georgia. So, so I've actually used it a lot recently, but we won't go into that. I'm sure you can all think of things that you've had that you either could have used it or did use it. Now, quickly here, I'm going to mention a few names of people that have wellness benefits coming to them, and I would like you to call me. You don't have to say anything. I'm just going to yell out a few names, and just please take the time to call me so we can talk about your wellness benefits from your plans. Alora Chambers, Susan Harper's here in front of me, never mind. Brian Lapointe, Greg Linkus, Paul Neal, Christopher Prather, April Stewart, Sarah Lapointe, and I think those are it. That's the entire list right there. If you could please call me, make a point to call me over the next, when's the open enrollment end?
Yeah, so housekeeping, the open enrollment ends on March 13th. So
11th,
oh, sorry, March 11th. So March 11th is when we're going to end it. So everybody has from today until then. They must re-enroll online.
Mm-hmm.
So
make sure Ruth's that your number's posted in Employee Navigator.
Yes, 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 yes. And again, with the last thing here, and I'll sign out, is Aflac has come out with a new rates on all their life insurance. And again, this is portable life insurance. So you can have the group plan, obviously you're going to have what they offer through the group, but our rates have gone down considerably on our portable life insurance that you can buy up to $500,000 on. So I'm going to sign out again with my last little Aflac duck. Let's see if he works. No. Aflac. Thank you for listening.
All right. Thanks for your time. Again, open enrollment is going to end on the 11th. Please go into Employee Navigator, complete your enrollment. You've got a few days to do that. In the meantime, if you have any questions at all, on the back of the benefits guide, that is, I believe we have posted or emailed out. Contact information, the very last one is Jamie Namath. Jamie is the account exec here for the Clear Group. You can ask her any and all questions. She is happy to help, whether it's a benefit question or you're having some issues with Employee Navigator. We are here for you all the way through the open enrollment, and then post-open enrollment, we are here to help you with any billing issues, claim issues, or provider searches, need to order an ID card, any of those sort of things. Please reach out to us. So again, thanks for your time today. Again, enjoy your benefits, and we'll talk to you soon. Thank you. Bye-bye.
Thank you.